Hello and welcome to this Astranti video. Today we'll be answering the question, who uses financial statements? Now, you're sure to encounter financial statements all through your CIMA studies, so it's an important question to ask. This topic specifically comes up in BA3 and F1, but it will be really useful for you to know this even if you've already gone beyond that stage in your CIMA studies. This is an extract from our video on Chapter 1 of our BA3 course. But if you want to view the full video, this can be found for free on the Astranti website as part of our full CIMA certificate course. So now we're going to jump in and take a look at who uses financial statements.
Okay, so let's kick off with the first of our groups, which are investors, and these are groups that we've mentioned a few times over the course of the video. And so by investors we mean both existing and also potential shareholders. So why are these groups interested in a company's financial statements? Well, quite clearly they are interested in the company's performance and profitability. If you're an existing shareholder, you're going to want a return on your initial investment in the company. And to get a return, the company is going to have to be generating a profit. So you're going to be interested in the performance and profitability to judge the level of potential return, or if you are going to be getting a return in the first place. Potential shareholders will assess the financial statements of their target company, again for similar reasons. You're not going to want to put your money into a company that is struggling financially, that is turning no profit, and hence will not provide you with a return on your investment. Another aspect to the why section of these groups is that investors may also have an interest in socio-economic policies. And what I mean here is that for some investors, the fact that a company turns a profit on its own isn't enough. And so they might want to see that the company is engaged in ethically sound socio and environmental policies, for instance. So something like the employment of child labour for a clothing manufacturer might be something that will put off potential investors, despite the profitability of this company, as it is acting unethically in its social policies. And so this is covered by the idea of corporate social responsibility, and a report detailing a company's CSR initiatives may often be included as part of its annual report or as part of its annual statements. Lenders, of course, are another group interested in the financial statements of a company. And again, these are current and potential lenders. And it's quite self-explanatory to explain this, but lenders are looking for whether they will be paid back or not. So for instance, a bank who currently has a loan out to a company will assess the company's financial statements to look at whether they will get a return on the amount of money they've paid out. Equally, if you are a potential lender, you will assess the financial statements of the company you are thinking of lending to ensure that they are a company that is in sound financial position and their performance is good, to ensure that you will get your money back. So I'd like you to picture an example of a friend who has a history of not paying you back for money that you have lent them. So this friend then comes up to you and says, "Please, can I borrow £20? You consider the fact that based on his past performance, he has not paid you back a number of times that you have lent him money. And you think, hold on, no, I've lost a lot of money lending you money that you have not returned to me. And so on this occasion, I will not be lending you money." And the principle essentially is the same for lenders who are providing money to companies. So a lender may assess a company's financial statements, and they may do something like they may conduct a bit of ratio analysis to see the level of the company's current assets compared to the level of their liabilities. And this will give them an indication of the likelihood that they will be paid back should they lend money to this company. And they can also look at things such as the company's cash position. So they may look at the statement of cash flows, for instance, and see whether the company is in a good liquidity position at the moment or whether they are struggling to obtain cash. And all these factors may then influence the lender's decision to lend to the business or not. Employees are another group who will use financial statements. And these are past, present and prospective employees. And so why will these groups use the financial statements? Well, they will be concerned with things like wages, job security and prospects, and pensions. Whenever you, for instance, apply for a new job, you're not going to apply for a company that is on the verge of collapse, are you? An employee will want to know that their company is in sound financial health and that it's profitable, and this means that it's going to continue to pay them wages, it's continuing to pay them a pension, and their future job security and prospects are sound. A company's business contacts will also consider their financial statements. And what I mean by business contacts are groups such as customers and suppliers. So for instance, imagine that you are a customer and you are looking to purchase a membership to a new gym. What you want is a 12-month membership, and before you sign up for your membership, you look at the financial health of the range of the different gymnasium companies around your local area using the financial statements. You're not going to sign up to a 12-month membership with a gym and pay for a 12-month membership with a gym that is suffering financially and is liable to collapse in the next 3 months, as you are only getting 3 out of the 12-month service that you paid for. Equally, the same prospect, the same principle applies in reverse somewhat for suppliers. If we return to our gym example, if you are a cleaning company and you are looking to supply a service to local gyms, you're looking to clean and maintain them, you're not going to sign a contract with our same gym that is liable to collapse in 3 months, as you will only have secured a contract for 3 months and there is no longevity in this agreement. Analysts and advisors will also consult a company's financial statements. And these are often specialists who work for groups such as investors or managers. And these groups are often people with a greater level of technical knowledge than the client that they are analysing or advising for. They in effect act as a middleman. And so if an investor is looking to invest in a particular company, they might hire an analyst or an advisor to look into the financial position using the financial statements of a company. These analysts have greater knowledge about the financial workings of companies than the investor and will use this knowledge in conjunction with a company's financial statements to make advise the investor on whether they should put their money into this company.
So we've come to the end of this video, and you should now know some of the groups who use financial statements. As you'll have noticed, there are still more groups to cover. But fear not, the full video can be found for free on the Astranti website, along with all of our other CIMA certificate resources. These include other videos, study texts, mocks, exam practice kits and revision notes. Be sure to also check out our CIMA certificate study group on Facebook, where you can give and receive support from other students. If you've enjoyed this video, why not subscribe to our social media accounts? We can be found on Instagram, Facebook, Twitter, LinkedIn and of course here on YouTube, where we upload new videos twice a week. Thanks for watching.